and talk for a minute about what's going on right now with banks. I'm sure you've heard a lot about it in the market. So, over the last, week and a half, some banks have almost collapsed or partially collapsed and been, absorbed by others. Signature, for example. So that is not. This is very different than the sort of financial mortgage crisis that happened, I guess like 8 years ago now. This is very different. What's going on right now is that we're in an inflation situation, which means rates have gone up for mortgages, which simultaneously means that the return on bonds has gone down. That's what happens during an inflation period. There's, to put it very simply, there's basically these banks were depository banks, which means banks that you put money into, right? Into checking and savings and CD accounts. And people were concerned that their money was going down in bonds and such. And so there was effectively a run on the bank. And because these banks did not have enough diversity in terms of the kind of investments they were doing, they were scared that they wouldn't have enough money to pay everybody back at once. That's very simplistic, but that's just sort of a snapshot of what happened. What's the takeaway? First of all, um, banks like myself, like Cross Country, are completely immune from what's going on because we are not a depository bank. All we do is mortgages. We don't invest in CDs or bonds or anything like that. Second of all, this is not going. What happened during the financial crisis, where we saw this lot of huge banks fall, and this be a huge home crisis, is not going to happen here because it's not about mortgages. It's about something else. Already, we've seen through the assistance of the government and variety of banks that it's already more of a snapshot for smaller banks rather than the big institutions. Um, Tomorrow there's going to be a Fed meeting, and that's going to be very, very interesting because when all of this happened, it was the beginning of a blackout time for the Fed where they basically cannot respond to what's going on in the market prior to their Fed meeting. So that Fed meeting is going to happen tomorrow, and it's going to be very interesting because many financial experts think that for the first time in over a year, the Fed might not give the same message it's given, which is we're fighting inflation, we're raising rates. There is initially there's a talk about, maybe a half percentage rate interest rate increase. Now that they're already talking about conservatively, maybe it being a quarter, or maybe them not announcing an interest rate increase at all. Because now there are other things going on than simply fighting inflation. What does that mean for you? Which is the most important thing. What that means is that we are very optimistic that we might starting to be reaching the crest of rates increasing and starting to go down to where rates are going to start decreasing, which is obviously great news for rates. That's also why this is a really great time to start getting pre-approved to find the house that you want and jump on it because before more and more people come into the market and there are more people wanting places than inventory available.